So Korea's stock market, it's been kind of catching my eye lately. There's this big shift happening with the rules and regulations. And you sent over those articles and I was like, whoa, what is going on with this? What does it even mean for the market? And for anyone, thinking about investing in Korea,
it's definitely got everyone talking. This whole short selling thing in South Korea, it's a pretty big deal. Could really shake things up.
Yeah, for sure. So let's just get right into it. The headline is that on March 31st, South Korea is lifting the ban on short selling. And that's not just some small tweak, right? For some stocks, this is like the first time in 5 years they could be shorted freely. And even for others, it's been a long time coming.
You got it. We got to go all the way back to November 2023 for the last time all listed stocks could be shorted. So what happened back then?
All right, let's rewind. November 2023, the Financial Services Commission, the FSC, they saw all this naked short selling going on, these violations, by some pretty big global investment banks too. Now, just to be clear, for anyone who's not a total finance whiz, naked short selling basically means selling shares of a stock that you haven't even borrowed yet. It's kind of like promising something you don't even have.
Adds a whole lot of risk to the market and, potential for manipulation, So the FSC stepped in, hit the brakes with this temporary ban, trying to get things under control, stop those violations. And now, they're ready to lift the restrictions.
Exactly. And the FSC made it official, March 31st, ban lifted, and their reason. They think this is going to, I'm quoting here, enhance the external credibility and market efficiency of the South Korean stock market. Pretty bold statement.
Definitely. But they've got this new system, this naked short selling detecting system they're relying on, NSDS.
NSDS. Sounds pretty high tech, like if you catch anything. So how's this NSDS actually going to work?
Basically, picture it as a superpowered audit. This system, it's always comparing the balance information, so what institutions should have based on their records, with their actual trades, what they're doing in real time. And if there's a mismatch, red flag. Could mean something fishy's going on, maybe illegal naked short selling, time for an investigation. And this whole thing goes live, like right when short selling comes back.
Smart move. It's like, okay, we're opening the doors again, but we got a brand new security system to make sure nothing shady happens. So what's the big hope here? Why bring back short selling with all this fancy new tech?
Well, analysts are saying this could be a game changer for foreign investors, a real stepping stone to getting them back into the South Korean market, especially the KOSPI, the main index.
Makes sense, right? The articles you sent, they talked about how the market's been kind of shaky after 7 months straight of foreign investors selling off their holdings. That's a lot of money flowing out of the market.
Yeah. Just before the announcement, foreign investors still had a good chunk of money in Korean stocks, like 741 trillion won. That's about $506 billion. But it was only about 29.2% of the total market cap. And what's interesting is that foreign ownership percentage, it's been stuck below 30% for 6 months in a row.
So they've been pulling back, for sure. But why is bringing back short selling supposed to lure them back?
For a lot of these foreign investors, short selling is a key part of their strategy, especially long-short hedging strategies. It's a way to potentially profit whether the market goes up or down, so they can make more informed bets and maybe even help reduce some of the volatility over time. Without short selling, some of these big-time investors just can't do what they do best in the Korean market. One analyst said that right before the ban, over 60% of short selling was done by foreign investors. So without it, the Korean market just wasn't as attractive.
Makes sense. Give them back their tools, let them play the game the way they're used to. And the hope is more activity, more market liquidity, right?
Right. And another analyst pointed out something interesting. Foreign investment in Korea. It's kind of low right now. So there's a lot of room to grow. Lifting the ban, it could be the spark that gets them back in the game.
Now, this ties into something bigger we've talked about before, how global markets are judged, ranked, all that. Let's talk about the MSCI Developed Market Index. Why is that so important here?
MSCI, it's like the gold standard. It's a global benchmark that pretty much every big institutional investor uses. They decide which markets are developed, emerging, or frontier based on a bunch of factors. How big the economy is, and importantly, how easy it is for foreign investors to get in and out.
Okay, so where's South Korea sitting right now?
Right now, they're classified as an emerging market. And in their last review, MSCI specifically called out the short selling ban. They said it was holding South Korea back, keeping them from moving up to that developed market status.
This is where things get really interesting. So lift of the ban isn't just about the market today. It's about how South Korea is seen on the world stage.
Exactly. One analyst put it perfectly. The short-selling resumption is not just a step toward capital market advancement, but also the first step toward Korea's inclusion in the developed market index of MSCI. And getting into that developed club, that could mean a huge influx of foreign investment. It's like getting called up to the major leagues.
Huge potential for sure.
Oh, yeah.
But there's always a but, right? Analysts were saying just lifting the ban isn't a magic bullet.
Nope, they made it clear. To keep that foreign money flowing in, the whole investment environment in Korea needs to be better, more stable. Short selling's one piece of the puzzle, but there's more to it.
Okay, what else were they worried about?
Two big things. A stable $1 exchange rate and no political risks. These macroeconomic and, geopolitical things, they can really spook investors. The exchange rate is like this. If you're investing from America, you've got dollars. You want to get a good deal when you trade them for Korean won to invest. But if the won is all over the place or getting weaker, that can make your investments lose value. Not good.
And, the articles even mentioned President Yoon Suk-yeol's, that whole thing back in December, the martial law declaration. Just goes to show politics and the economy, they're always tangled up.
Yeah.
And just to be clear, we're just reporting what the article said here, not taking sides or anything.
Right. The analyst pointed out that event definitely added to the instability and pushed the exchange rate up.
Yeah.
But they also said if things calm down politically, we might see the $1 rate drop back down maybe to the mid-1300s in the first half of this year.
And a stronger one means Korean assets look better to foreign investors, right?
Exactly. Like one analyst said, if the Korean won is expected to appreciate, foreign buying pressure will strengthen. Basically, if the won gets stronger against the dollar, more foreign investors will want to buy Korean stocks and stuff. It's like their money goes further.
So, March 31st, it all goes down. The main Korean stock indices, 17 months for them, and even longer for other stocks. Are institutions ready for this?
The FSC has been busy getting everyone prepped. They said there are 21 big institutions, the major players, Morgan Stanley, JP Morgan, Goldman Sachs, plus some big Korean firms. They're all setting up their systems, doing simulations with this NSDS thing.
So the heavy hitters are on board. What about everyone else?
62 other institutions are going to join in using a pre-deposit method. Basically, they put up the borrowed securities before they can short sell. All in all, they're expecting 83 institutions to be ready from day one. That's like 85.6% of all the short selling that used to happen. So yeah, people are definitely interested.
But let's be real. Big change like this, there's always a chance things get a little wild in the market. Anything in place to keep things from getting out of control.
Yep, they thought of that. The FSC is going to use this thing called the System for Designating Overheating Short-Selling Stocks. It's a mouthful, I know. But it's basically a way to prevent any one stock from getting hammered by too much short selling all at once. And they're going to keep it running for 2 months, till the end of May.
Okay, break it down for me. How's this overheating thing work?
So if there's a sudden surge in short selling for a particular stock, way more than usual, that's a sign it might be overheating. And when that happens, bam, short selling for that stock gets shut down for the next day.
Makes sense. Kind of like a circuit breaker. Did those simulations give any hints about how often this might happen?
They did. The FSC ran the numbers, and if they adjust the rules for the Kaiuzi Q like they're planning, we might see twice as many overheating stocks in April and even more, like 1.3 times more in May. So yeah, they're expecting some bumps in the road.
Sounds like they're keeping a close eye on things. What about the overall oversight leading up to March 31st?
So the NSDS is running in test mode until the 27th, and anyone who's not up to snuff, they got to fix their systems before they can play. And the Financial Supervisory Service, they're doing a final check on everyone, making sure the systems and internal controls are all good to go.
Really sounds like they're doing everything they can to avoid those problems that led to the ban in the first place.
Yeah, they learned their lesson. A big wig from the FSC, they said they're going to thoroughly implement measures to prevent naked short selling before the ban lifts. And after March 31st, they're going to be watching everything like a hawk, making sure there's no funny business, closely monitoring market trends and strengthening market surveillance to block any unfair trading practices. That's what they said.
Okay, let's wrap this up. South Korea is lifting the short selling ban on March 31st. That ban came about because of worries about illegal naked short selling. Now, they're doing this to make the market more efficient and, most importantly, to get those foreign investors back, because lately they've been selling their Korean stocks. And getting those investors back, that's a big step towards maybe getting upgraded to the MSCI Developed Market Index, which could be huge for Korea in the long run. But just lifting the ban isn't enough. The whole investment environment in Korea needs to be better, more stable. They got to get the exchange rate under control, and all the political stuff can't be spooking investors. And to make this whole thing work, they've got new systems to catch the bad guys and lots of oversight to make sure everything's on the up and up.
You got it. That pretty much sums it up. This whole short selling thing, it's a big deal for South Korea. It could really change how their financial market works and how the rest of the world sees them.
So for everyone listening, here's something to think about. This is just one example of how a change in the rules can have ripple effects all over the place. It's all connected. The rules, how investors are feeling, and all the big economic and political stuff happening in the world. And that makes international finance pretty darn complex. What other changes, maybe ones that seem kind of technical at first, could have a huge impact on global markets? Things we might not even realize are connected. It's a lot to wrap your head around.